Hi, welcome back to CoinDesk Live. I'm Lee Quinn, and I'm joined today by Muneeb Ali of Blockstack. Thanks so much for joining us today.
It's great to be here.
So congratulations. I know that you have one of the first regulator-approved utility tokens in the country. Can you tell me a little bit about why it was you took this approach and how it will impact the utility of the asset itself?
Yeah, so I think looking at the kind of like paths that we have taken, if you go back to 2017, and it was kind of like the Wild West era, everyone was throwing up a white paper and trying to kind of like raise capital through these quote-unquote ICOs. And we've been doing like R&D work for over 4 years. We were backed by venture capital, and we were getting ready to effectively launch our Stacks blockchain. So we looked at the legal frameworks, and at that time, we had to limit the distribution of these tokens to only accredited investors and larger institutional investors, because the structure was these were Delaware funds, and these investors were becoming limited partners in those funds. And we really wanted to open our network to our core community, to our developers, and at that time it wasn't possible just from a purely regulations point of view. So what we ended up doing was we actually gave these non-binding vouchers to our community members.
What do you mean by community members?
So people who are enthusiasts, people who are developers, who hang out in our like chat channels or on our forums. And we said that let us work on a legal framework, and you can come back and effectively get the same price. And the second thing was, once other projects also looked at the same problem, and they would come to the conclusion that let's just ban US investors or try to move offshore. And for us, like being, our kind of like main office is based out in New York, all of the team members are here. For us, like opening up the US public markets was actually very important. So we started working with regulators, mainly the SEC, to sit down with them, have conversations, and basically figure out that what kind of legal framework needs to exist for utility tokens like the Stacks token to be distributed to the general public. And imagine that the securities regulations have been around since 1933, and this is the first time ever that a crypto asset got qualification from the SEC that it's okay to distribute this to the general public. And I do think that potentially this can help mature the industry, and a lot of other projects can benefit from the work that we have done with the SEC.
Are there any regulatory constraints or compliance requirements that impact how it is people can use this asset?
So this was something that was very important to me, right? Like the use of the token on the network is something that we don't want to change that based on the regulations. So effectively what happened was that when I was having discussions, so my background is in computer science, I did a PhD in distributed systems, and I was learning about securities regulations and effectively trying to be the bridge between the two. And I think the aha moment for me was when I realized that the technology can adapt faster to regulations than regulations can adapt to the technology.
Gotcha.
Right? So I would go have discussions, come back, tweak the protocol so that something is no longer an issue, right? Or the other way around, we would take our technology, translate that into a language that is easy to understand for the regulators or lawyers, and basically try to bridge that gap. And this way, effectively, the framework, very broadly, the framework that we landed with, most of these restrictions are around the issuance of the token. That how is this token being introduced into the ecosystem? And if there are certain restrictions, like for example, the early 2017 offering had a year and a day lock on it. We enforce those restrictions at the blockchain level. But once a token is kind of like liquid, and you can use it, it's fungible, and it can be used for any operation on the network. People can even sell it peer-to-peer or use it accordingly. And that was something very sacred to me, because I don't want the network, the future use of the network to be impacted by the initial framework used to distribute the token.
Yeah, that makes a lot of sense. And I believe it was last week, word on the street was there was overwhelming demand now that we know that Stacks is available and able to be used. Can you tell me a little bit about, do you think that there will be other altcoin projects or token projects that will be following a similar model? Or do you think that there's something very unique to the way that it's being distributed and managed right now?
I think it's entirely possible that a lot of other people also start following this model, not just because of being kind of like compliant with the applicable law in the US, potentially abroad as well, but also that there is similar kind of regulations that apply to exchanges as well. We know that a lot of exchanges are also trying to get the appropriate licenses from FINRA. SEC has a passive approval. And so exchanges are also trying to figure similar things out. Mm-hmm. And if you kind of look into the future a little bit, in my view, it's entirely possible that projects would have to follow like a path similar to ours. Mm-hmm. It might not be a Regulation A+ filing, because I think a Regulation A+ filing is for companies that are a little bit more mature. Mm-hmm. You need audited financials, and also like the amount of capital raised is more. Mm-hmm. And I think there are other frameworks available, like there's the Reg CF, which is more for seed stage companies. Mm-hmm. And and especially like when people are distributing these tokens, they also need to think about where are these tokens going to be listed, what are the kind of requirements. And I think that's the thing that is more on the exchanges, that if exchanges become more regulated as well, and they effectively, the only way to get listed on US exchanges is if you have released your token by following all applicable law. Mm-hmm. A lot of other projects would kind of like by default almost start taking this route versus kind of like, sitting in their basement and firing up a smart contract to start doing the distribution.
That makes a lot of sense. I want to think with you about previous market cycles. In 2017, during the big token sale boom, we saw speculative trading as probably the primary thing that was bringing people into the space and making them interested in tokens. When you think about right now in 2019, we haven't seen maybe the same retail boom yet as Bitcoin's price has started to rise. Do you think that there is use cases and usability already for some of the projects like your own when it comes to those assets beyond that speculative trading?
Yeah, so I think crypto markets, in my view, are cyclic in nature, right? And markets in general tend to mature after every cycle. Mm-hmm. And I've been in crypto for like 6 years now.
You're a veteran at this point.
Yeah, I think when I started, Bitcoin was trading at like 100 or something like that. Wow. So we have seen a couple of these cycles go up and down, and the markets do become mature every time. If you look at 2017, I think people were kind of like, they didn't have that much access to information, and even if you look at companies like Masari, mm-hmm. like they're doing a really good service to the community by providing information that people should be able to take a look at. And in many ways, the filing that we have done with the SEC has the same goals, right? The main purpose of the filing is that it reduces information asymmetry between project insiders like myself mm-hmm. And the general public, mm-hmm. right? So all of the risk factors are disclosed, all of the financials are disclosed, like any material thing that people need to know about the project. Now there's a public filing, and they can go and actually read that information. So I think we will likely see more of that kind of more professional, more mature projects that are entering the system. And hopefully, at least I really hope, that the speculative behavior goes down.
So for your project so far, what is the usability or the distribution system that's been unique to that asset?
Yes, so the way we designed our system, first a little background, I think our approach was very, very different as well. We raised venture capital mm-hmm. to do R&D work, mm-hmm. right? So it's almost like we were trying to solve hard computer science challenges first. Mm-hmm. Then very explicitly, when we were ready to move into infrastructure building phase, we raised our Series A round. And then I would say starting from like around Q4, when mm-hmm. our Stacks blockchain launched, we are in developer traction phase, mm-hmm. right? And the number of kind of like independent applications or independent teams that are building on top of Blockstack has gone from 17 to 46 to 86 to 170 in the last 3 quarters. And I'm like really excited about that imagine like 170 independent teams who are now mm-hmm. trying to build on top of a decentralized computing platform that can actually scale, mm-hmm. because we've already done all of the R&D work required for having really solid foundations. And one of the things that we paid a lot of attention to was incentive mechanisms. Mm-hmm. So there is a game theory-like aspect to our mining mechanism. And this is work that we did with professors from Princeton and NYU who helped us design this incentive mechanism, where imagine that the normal miners, they are contributing to the network with their compute power, right? Developers can actually contribute to the network by spending their time and their skills and building high quality applications, right? So it's almost like you're mining, you're an early miner on the network by building high quality apps. And then there is a semi-decentralized process for how we rank these applications, and obviously it'll keep getting more and more decentralized over time. But that is super interesting because it's almost like an explicit allocation for developers in the distribution of the token, and it's basically, we have real data now over the last 6 months, like how good that incentive mechanism is working out.
Gotcha. And I just want to point out that when you say the process is quasi-decentralized, by that you mean external parties contributing to the evaluation, correct?
Yes. So we have a set of independent reviewers, and we want to keep increasing the size of those reviewers, but also potentially enable Stack's token holders to participate in this process as well. So for example, let's say you're a Stack's token holder, you want to have a say, and you think that these are the kind of like top applications built on Blockstack, you should be able to do that. And as we take those steps, the review process becomes more and more decentralized.
So having external contributors and having an incentive mechanism that encourages contribution across different kinds of skill sets, it's been really important for you guys.
Yes.
So I want to think again about like the use case for this. So a lot of Bitcoin fanatics, and I mean that in a very, very good way, will argue that censorship resistance and in some ways regulatory arbitrage is like the main use case of Bitcoin. And when we think about altcoins or we think about cryptocurrency projects that maybe aren't targeting that precise use case of financial transactions across borders, what do you think about the potential for cryptocurrency projects that still might actually have real value from an asset and from using blockchain technology or distributed systems without necessarily speaking to that financial transaction aspect?
Yes. So I think if we zoom out a little bit and look at these tokens as a new type of a digital asset or a crypto asset, people would come up with all sorts of different use cases for these assets, right? They could range from like assets in games. I think people are actually used to having digital assets in games and even like trading them, or what blockchains enable you to do is you can have like very explicit property rights with those assets, and you can take them from, let's say, one game to another, trade them if there is some sort of a trading system that kind of like supports that trade. So that's very clear that these crypto assets can have many different types of usage. Payment as currency is one specific type of use. For the Stacks token, it's basically used to register digital assets on the network, like usernames or domain names, or if a developer is publishing an app, or if a developer is publishing some sort of a digital asset. And then it's also used as fuel for running smart contracts. And that use case is similar to Ethereum, and we have seen that the Ethereum ecosystem has a lot of developers and people use these smart contracts. The Blockstack project is different in the sense that our blockchain is, there's less logic at the blockchain layer, and we have a very scalable storage system, and our architecture is in many ways exact opposite of Ethereum, right? So it's the technical decisions that we made are very different from Ethereum, and also the approach we took with Regulators is again very, very different from Ethereum. But the use of the token is somewhat similar in the sense that it's used for smart contracts and it's used for registering digital assets.
Smart contracts meaning the execution of business logic.
Yes. So in our system, in Ethereum, like almost everything needs to be a smart contract, and almost everything has global state, meaning that any interaction results in a change for a state for everyone on the network. And that's the biggest kind of like scalability bottleneck that Ethereum is facing. Like imagine that, let's say you just build an app and your app becomes popular. Your app is slowing everybody else down on Ethereum. And that's the kind of like the core of the scalability challenge. In Blockstack, you have localized state changes, meaning that if my app is getting popular, the users interactions are not slowing everyone else down. They're kind of like contained within a localized state change. So that's the main difference between Blockstack scalability and Ethereum scalability. And not everything is a smart contract, right? Most of these applications are built in languages that people are just kind of like familiar with, because not everything needs to be automated at the blockchain layer. And that's again a very big difference, where smart contracts become a subset of the kind of logic you want to have. They're not the only way of interacting with the blockchain.
So you said something there that really stuck out to me, is need. Doesn't always need to be. Last time in 2017, what we saw with the alt season is a lot of excitement and very quick returns on some of these smaller assets. Even as Bitcoin was going up, maybe it didn't have as much returns as those smaller, very exuberant assets. But that's for speculative trading. That's for quick gains. It's not for long-term usage. When we think about assets like stacks and like others that might actually be needed, what do you think is how do you define like when you need to have a distributed system, when you need to have some kind of smart logic built into that system, and when you don't?
Right. So I think it's basically, there are now more sophisticated models trying to study the underlying value of a digital asset. I think Chris from Placeholder has done some excellent work on it, and I would recommend everyone to go and read his analysis of these different types of models. But stepping out a little bit, basically, I think of this as if there is a single gatekeeper, like there's a single company, imagine Facebook, that is responsible for maintaining a network, and the company has some sort of a business model for why they're providing that service for free to everybody else, right? So that's how you end up with a centralized system. And when you're trying to replace the company with a decentralized system, there can't be any gatekeeper, right? So our company, Blockstack PBC, cannot effectively decide that this user can register on the network, or this program can run on the network and this program cannot, right? But you still need to do rate controls. You still need to keep like spammers out, make it hard for spammers to kind of like spam the network, and all sorts of different reasons for why it is very hard to build decentralized systems without these crypto assets, as like scarce crypto assets, as the thing that rate limits the network or keeps the network secure. So in many ways, the token is replacing the company, right? And as a byproduct, people can have a financial stake in the success of that ecosystem as well, which is something that was not possible with companies like Facebook. Imagine the first kind of like 100,000 users of Facebook. They effectively just used a free product. They didn't have any financial upside in being the first 100,000 users of Facebook. That changes with systems like Blockstack. Similarly, for developers, you need to be employed by Facebook to get stock options or some sort of incentive to help grow Facebook or build like on the Facebook systems. In Blockstack's world, that's app mining, or that's just any developer who can have a potential financial stake in the underlying asset and then spend her time and energy building out applications, right? So there's no artificial wall between I'm a Facebook employee and I get stock options, versus I can just decide to dedicate my time building on top of a decentralized system and have a stake in the underlying asset.
Where do you think that we are today versus where we were a few years ago? What do you think about the general broader marketplace has changed?
I think it has changed a lot, like especially with a lot of big players. Like, you know, I know Facebook Libra was in the news a lot, and it's like free publicity for crypto. So I actually welcome them to play in this ecosystem. And Facebook is not the only party. I was recently in Asia. Blockstack has a fairly significant focus on Asia these days, and Kakao in Korea is the most popular kind of like messaging application, and they seem to be very further along, even potentially more than Libra, in terms of their blockchain and their alliance and how they want to integrate these wallets with all of the Kakao users and so on. So in many ways, the bigger industry players, the traditional tech players, are now paying a lot more attention to this space, and which is great. And similarly, I'm noticing more sophisticated engineers are now more curious about kind of like working in this space. One thing that I've been kind of like disappointed by in the 5-6 years that I've worked in this industry is just there are some very talented people, but overall just the technical depth of engineers who are actually working in this space was not very good, right? And that actually sometimes leads to misinformation, or it leads to a situation where people can't really understand the underlying core challenges that need to be solved, and it results in discussions which are kind of like heated on Twitter and stuff like that. Once you have more sophisticated players in the industry, it helps mature the industry, and it actually increases the quality of conversations happening as well. And that's a very positive change that I've started noticing recently.
So a lot of the very talented engineers that are in this space are very interested in Bitcoin. What is your argument for why people can be both very interested in Bitcoin and interested in alternative currencies like stacks and like other kinds of projects?
Yeah, I think Bitcoin is fascinating. The work that happened almost like 10 years ago with a kind of like core design, and then how it's evolved as well. And they have if you look at this as an ecosystem, and an ecosystem where there is room for many different types of players, Bitcoin is in the corner where it is kind of like your store of value. It is the system that is not going to change a lot, right? So people can rely on it. They're not experimenting like crazy with the core protocols. They're trying to be stable. They're trying to be secure. They're trying to give people the guarantee that you can always rely on this system to be there, right? And then there are other types of players like, let's say Ethereum, which is highly experimental, right? Like they would go for these, sometimes what I consider as like pie in the sky ideas, and the reaction from their community is very positive about these crazy sounding ideas as well. But they're filling a role in the broader ecosystem where people who are interested in highly experimental things can actually go and be a part of the Ethereum ecosystem, right? And then there are players like us who come from more traditional distributed systems background, and they are trying to build something very reliable, something that is basically, we are not competing with Bitcoin at all, right? Like there's no payments aspect of our system. Our system is more for Web3 type applications. If you look at what developers have built on top, those applications range from alternatives to Google Docs, professional networking sites, even like photo sharing sites, or doing your taxes privately, or signing documents in a private, secure way. These are like very real applications that you can get utility from
the distribution.
For even today, right? And those are the type of developers we are attracting, and those are the type of people we are optimizing our developer tools for, or even the underlying technology for.
So as an altcoin project that went about this as thinking traditional VC, traditional companies, computer science company, and very strategically and slowly released an asset into the marketplace, what do you think about, I guess, the potential of that model to encourage decentralization in a way that's comparable to Bitcoin, but obviously will need very different timeline and structure as a company?
Yes, so I think there's this, again, if you roll back like 4 or 5 years, any project that would effectively not launch in a way that Bitcoin launched would get heavily criticized. They would call it kind of like a pre-mine, and even the term altcoin, it's kind of like defining like everything that is not Bitcoin is altcoin, right? Like, whereas if you take a approach of like, hey, these are types of crypto assets, and there will be many of them. They would have different types of properties. They would have different types of distribution models, and all of that is fine. Compare that to like consensus protocols. I think the most famous one would arguably be Paxos. And what if we called every other consensus protocol not Paxos? Like that just wouldn't make sense.
Fair.
People are going to come up with other types of consensus protocols. They are going to come up with other types of trade-offs. So when we looked at kind of like properties of decentralization, we took the approach that it's not a switch that you just turn on or turn off. It's a path, and you need to be very careful about the path to decentralization, right? Like you need to be very thoughtful about all of those steps, because you can fumble along the way, right? Like extreme decentralization from day one might not be a good thing either, because sometimes you need strong leadership. Sometimes you need a core team. Like for example, look at Blockstack. We have hired a head of engineering from Dropbox, Devakar, and he helped take Dropbox public. And he has a skill set, and if you have a well-oiled engineering machine reporting to someone like Devakar, who has experienced and he can actually execute really well on the core technology, the value added by operating like a startup on the open source technology is actually a lot. Versus imagine the model where there's no single team, no one even sits in a single place, and people are coming and going, no clear leadership in place. There are challenges with those types of approaches as well, which some projects are now hitting, and are being criticized that you guys don't have your act together, you don't know how to deliver, and so on. So we take the approach that it is okay for a single company to be more responsible for development in the early years, and then there's a path to decentralization. And of course, you're trusting that company a little bit more, but then you need to look at, you need to earn that trust, right? So the way we did it, we have already started things like we have made an investment in an independent entity in Hong Kong, and we were very careful about the structure of that investment. Whereas there's no overlap in the board directors, there's no overlap in officers. So it's a truly independent entity that now exists in our ecosystem. Same with, we announced potential plans for a foundation. Again, like the way we would go about this is that it would be a truly independent foundation. Like sometimes you would end up in situations where on paper there are entities, but they're actually all interlinked, right? And it's the same people controlling like 5 shell organizations, which means nothing, right? So our approach tends to be more thoughtful, and yes, people can criticize that Blockstack PBC has more control. That actually links directly with our SEC filing. That one of the reasons we are complying with securities regulations in the US is that if the SEC thinks that Blockstack PBC currently has basically has enough control on the network, that Blockstack PBC financials or Blockstack PBC disclosures are material to the rest of the network, then Blockstack PBC should be making those disclosures, right? And even in the filing, we discuss our path to decentralization, that their core developers could be employed by other universities, potentially like other organizations that are truly independent, so that the network is no longer only dependent on the efforts of a single company, and it's abundantly clear to everyone that this is a decentralized system. At that point, our kind of like disclosures and filings with the SEC would no longer make any sense, right? So we explicitly discuss how after that path to decentralization, we would even potentially withdraw the filing from the SEC. It would no longer have ongoing reporting requirements.
So most people that are involved with crypto assets that I talk to talk about having a path towards decentralization. For you guys, how did you structure accountability? You mentioned having external bodies participating, that's an important part. And how do you measure when it's decentralized enough for you to withdraw? What are the benchmarks and the structures that you put in place along that path to keep you guys accountable to it, as opposed to having it be a very lovely idea?
Yes, so I think the top thing that we discuss in our offering, one is this idea of a core developer, right? So these are usually blockchain engineers, and it's a very rare skill set. Like you need to be an expert in distributed systems or applied cryptography, or sometimes like both. And the idea that how many core developers are contributing to the core protocols, and they are part of independent organizations. So you can actually measure it, right? You can look at the GitHub code, who is actually contributing and what are their affiliations.
Gotcha.
Right? So that's one thing. The second thing is actually miners, right? Miners are in a way operators of the network. They process the transactions, and if a single entity has a lot of influence over mining, then the single entity is actually operating the network. The interesting thing about the way we are launching the Stacks blockchain is our company cannot mine on the network. So we would have like 0% kind of like control over the mining process, and it will be all independent entities. And similarly, I think other things are just the health of the ecosystem, that how many players there are, that if, I think one rough model to keep in mind is like, if Blockstack PBC disappears like completely, can the ecosystem self-sustain itself, right? And that's like kind of like a rough measure of how decentralized the ecosystem is.
So what I'm hearing from you is you take the ecosystem apart into different kinds of players, and then you need to understand a diversity of those players that do not have overlapping interests or responsibilities.
Yes, that how much, yes, like can this, if you look at gold, for example, right? Like if a single gold company that does something related to gold that disappears, it wouldn't even be a blip on the gold market, right? Because it is such a healthy, decentralized ecosystem, and that's why gold is a commodity, and it's not considered a security.
Gotcha. Are there any other thoughts you wanted to share with us in general about the broader marketplace, the way that you're seeing it now after all your years of experience working in this industry? Do you think there's anything now that we should be keeping in mind, noticing that there were previous patterns of, or just being wary of in general?
Yeah, so I think in general, I am obviously very optimistic about the coming years, where just like our SEC qualification went through, and crypto assets now are a thing that the regulators can agree with, and similarly, I remain very confident that the same would happen for exchanges as well, right? So we will actually have more accountability, more transparency. All the stuff about some exchanges who are kind of like wash trading, or they're like.
But we already all knew that, right?
Yes, but
so what's changing now?
It's like I look at it as an industry that is maturing, right? You're already doing so many innovative things. You can reuse lessons from past decades for why it's a good thing to have discipline, and why it's a good thing to be transparent. Like, all regulations are not bad, and I think I'm pretty sure I'll get yelled at on Twitter for saying that, given the kind of audience that got attracted to crypto early on. I think one thing people need to realize is that for things to go mainstream, like all the early crypto enthusiasts, they are really interested in Bitcoin going mainstream, and they're really interested in decentralized applications going mainstream.
Do you think so? Do you think that's a desirable effect, to have Bitcoin be mainstream? In what is mainstream? I mean,
like in the sense that a lot of people have Bitcoin, right?
Yeah.
Or it becomes the global reserve currency of the world, right? Like, I think a lot of people are interested in that, but there's a catch-22 situation. For these things to go mainstream, sometimes you need to let go of the initial extreme type ideas that you are holding on to, because normal people are not going to be attracted to these technologies if you kind of like hold on to those extreme ideas. And regulators are one of them. Regulators will have to become comfortable with these technologies.
What's the extreme idea that Bitcoiners need to grapple with if they really want to achieve that mainstream goal?
I think like for example, just continuing on with this discussion of regulations, right? That we don't need governments, we don't need regulators, right? I think it's a fairly extreme point of view. Yes, that regulators can be slow, there could be a lot of overhead, but you need to have, like, when we started working with the SEC, for example, we had this belief that they're trying to do the right thing, right? They're trying to watch out for the interest of the general public. And yes, there is that back and forth involved and overhead involved in trying to work with a regulator, but it's by far the net positive thing to do, right? And I don't think that people would agree with me on that, right? Like they would think that regulators should not exist, and they're a net negative for the ecosystem.
So many of the applications that are being developed on Blockstack deal with censorship resistance in a way, deal with self-sovereignty in a way, and yet are being expressed and explored through a highly regulated and business application, right? So how do you think that we can work with regulators and work within traditional systems like a business in order to further the broader point of censorship resistance technology?
Yes. So let me answer that question very, very broadly. So think of it this way, that the reason why I'm excited about the SEC qualification is that we have maintained the decentralization properties of the asset while getting the qualification. Right?
Meaning the multiple parties contributing to the project and distribution that do not have overlapping incentives, when you say that?
No. What I mean is that let's say that you want to go and purchase Stacks tokens from a peer, like a local Bitcoin style transaction, right? And then you want to use the token on the network, however you want, whatever digital asset you want to register. You don't need to KYC. You don't need anyone's permission. Like, you can just do it, right? So that's a decentralization property where this network operates like any decentralized system that you would expect it to operate. The regulations mostly apply on the initial issuance.
Gotcha. Like
the first people who are kind of like participating in our token offering, for example, which is live on stackstoken.com. So in a way, it's a big win for decentralization and decentralized systems, where we got the qualification and we preserved the decentralization properties of the core network, right?
And yet, so from alt season, what we saw was even assets that were not necessarily meant to be financial assets ended up having a wild degree of speculation around them, and very quickly were going up and down in price. That's happened a little bit less, with Stacks. So do you feel that the initial distribution was what impacted people's ability to get it from anywhere, but not necessarily treat it like these other assets, to really focus still on that utility?
Yeah, so I think Stacks are also not really traded anywhere.
Yeah.
Like, I think there are reports of exchanges that are listing them, but we can't verify if it's the right
So that was a very deliberate choice.
Yes, but we have done many things to scare away people who would be interested in buying an asset and just flipping it on the market. So I can tell you some examples of our long-term thinking. Everyone in the project, like any employee or founder, they have a 3-year unlocking on the tokens from the day of launch, right? Which is separate from their vesting with the company, right? So I have had a 5-year vesting with the company and 3-year unlocking of the token. So that's like an 8-year time horizon that we're talking about.
Very patient.
And similar, I mean, you need patience for building like such ambitious projects, right? Same with our investors. Like they have very long, like 3-year unlocking for the equity investors, 2-year unlocking for people who participated in 2017. So liquidity kind of like slowly comes out every month for everyone, right? And we were also limiting large investors. Like when we were raising our capital in 2017, it was entirely possible to take like $20 million from a single investor. We didn't. We capped everybody at $3 million because we wanted a wider distribution of the token. Same thing is happening with our public offering right now. Like, it's not a traditional ICO where there's a mad rush. Anyone who wants to put more than 200,000 actually gets flagged in our online system. They need to talk to us manually, and we are letting smaller checks go in because what we are optimizing for is a wider distribution, because we want to give Stacks tokens in the hand of the general public in a fully legally compliant way, and we again want to avoid this situation where there's a single party who effectively got hold of a lot of tokens, and those tokens were liquid on day one and just flipped them and then walked away because they didn't care about the underlying project.
Gotcha, that makes a lot of sense to me. Is there any other piece of wisdom that you want to leave us with if there's a newbie that's coming into the space now and thinking, wow, there's so many different kinds of cryptocurrencies beyond Bitcoin? When your patience was something you mentioned, that's important. Beyond patience and widely distributed and thoughtful initial sale, are there any other things that you think that we should be keeping in mind as we go into this next season of the market?
Yes, I think there's one thing I want to bring up, and it might be a little bit of a controversial statement, but
okay.
I think people on Twitter would like it. I think what has happened with this market is obviously Bitcoin has by far shaped the market. Like the initial ideas of Bitcoin have shaped the market. Like you kind of like see those ideas everywhere. But also Ethereum, right? Ethereum was the first kind of like project that was trying to do smart contracts, that was trying to do these general purpose applications beyond payments. And there are many ideas that Ethereum introduced into the market, like things like...
Did Ethereum come before like Risk and Omni and the other kinds of...
There were efforts like, you know, some
Coins.
colored coins on top of Bitcoin. I'm talking about mainstream. Like if you look at Ethereum is by far the kind of like the number 2 market cap project. It is by far, you know, the largest developer community around Web3 type applications, right? So it has actually influenced a lot of the thinking behind Web3 architectures.
Web3 architecture, can you define that really quick?
So basically anyone who's saying here's a decentralized application, a general purpose decentralized application.
A general purpose application for which there is not a single company or entity controlling access.
Let's say a decentralized Twitter.
Gotcha.
Or let's say smart contracts. I think Ethereum has defined a lot of thinking behind smart contracts. And one controversial statement is that a lot of projects just blindly followed the path that Ethereum was going down on. So I see a lot of projects who come in and say, hey, Ethereum is trying to do sharding. We already do sharding. Or Ethereum is trying to have this like transactions per second rate. Our transaction per second rate is like better, right? And then similarly, it's like Ethereum has Turing complete languages, and we have Turing complete languages and long running programs, right? Everyone is trying to like one up kind of like the same design, but people are not asking the question that, is it possible that the original design is flawed? And not only that impacts Ethereum, because that's why they're trying to build Ethereum 2.0 now, because they need to scrap Ethereum 1.0, but it's impacting the entire industry because a young generation of engineers are just going down the wrong path, trying to optimize the wrong things.
You think it's a controversial statement to say that Ethereum has some fundamental engineering issues? I feel that's a very commonly held opinion in the Bitcoin space.
I think I've been yelled at by enough Ethereum enthusiasts to be careful around these statements.
Okay. So what would be the advice that you'd want to give to someone who's new that's maybe very...
I would say keep a very open mind. And it's possible that there would be a need for kind of like unlearning some of the bad things that people have learned in our ecosystem, and then relearning better concepts, better technical concepts for how to build secure, scalable systems in crypto. So it's almost like there's been a little bit of a disservice that we need to roll back. And anyone who's new, especially an engineer, should come in with a very open mind and be skeptical of the existing approaches, that there's a reason that they haven't worked, and they should do a more broad search and look at alternate, like different architectures that are out there.
So someone should both be very open-minded, but also be very skeptical and try and relearn. How do they understand what it is they need to relearn from? Like if you have a bad source of information, how do you find external sources of information you can apply to those token projects?
Yeah, so I think a lot of that actually needs to go back to first principles, right? Like where I do think that there is a lot of misinformation out there. Especially the worst type, not the worst type actually. There's a certain type of information out there where the people who are writing or trying to educate others actually have good intentions, but they just don't have the skill set, right? So it's like it becomes very hard to criticize someone like that because you actually have good intentions, but you don't have the skill set and you're getting things wrong, and then you're now helping spread that kind of like flawed concepts to others. And what I've seen in other areas, like I've worked in cloud computing for a while. I've done a lot of work in wireless networks, like back in the early days. And over there, I think there are some standard things like effectively like better peer review processes, better venues that are respected. Like it's surprising to me that most of the crypto conferences are very much like marketing and industry driven, and they're actually not technology driven. And similarly, like if you look at publications as well, there tend to be a lot of like sensational news, but not a lot of like technical in-depth analysis or reviews with those publications as well, right? So we're doing a lot of work on the surface, but not really supporting the ecosystem with the kind of support that we've seen in, let's say, cloud computing or other more mature ecosystems.
Do you know of other publications that cover something like cloud computing with a peer review system that's not an academic journal out of a university? Because like, okay, I hear you on this, and as somebody who doesn't have a technical background and writes all about cryptocurrency, I very much understand the responsibility and the dangers of informing the public about something that you're learning about as you go. But I feel like that has a lot to do with the business model that we're working with, right? So how do you learn as you go and still share, but not without completely changing your business model?
Yes, I mean, I think, look, the industry has a certain trajectory, which is organic, and it's going in a certain direction. All we can do is like try to nudge it in a better direction, right? One thing I noticed, for example, like I'm just going back to the early days of cloud computing. So the guy who made Amazon AWS happen, his name is Werner Vogels, and he was a computer science professor at Cornell University, extremely respected researcher in our circles in distributed systems. And he had this blog, I believe it's called All Things Distributed.
Okay.
And he's a leading expert, and now he's going deep on the technical architectures.
Gotcha.
Or they have just published a paper at one of the top distributed systems conferences, and they do a deep dive into it. I'm trying to compare like leaders who were, and there were other such leaders like Werner Vogels in the environment. I'm trying to compare them with what's happening in crypto, and it's like I would really like to see more people like Werner Vogels get involved and kind of help the ecosystem by giving the kind of rigor, like technical rigor, that is actually needed to help mature this industry.
So what I'm hearing from you is people who need to relearn need to look for traditional sources from the earlier days of the internet and distributed systems, and think about those core fundamental engineering concepts, those software concepts, and then apply them to the new technology, because it's not like we've invented something new. This is software.
Yes, and I think I think we should acknowledge the challenges here as well.
Yeah.
Because one thing what I've noticed is that sometimes like people that I highly respect, so there's a professor at Princeton who was on my thesis committee, Arvind. He did some research work with a team, and I believe it was about Monero, and they published the finding, and they were attacked by the community to the extent that they took their website offline. Like imagine a researcher who is not used to such kind of like hostile environments.
Twitter attacks? I can't imagine. What would that be like? Yeah, I understand. It can be really controversial to try and explore these ideas in public.
Because I think what's different in crypto is that there's money involved, like direct liquid capital involved, which was really not the case with other research areas. And similarly, there are organic communities who are very almost like religious views on certain projects, which was also not the case in a lot of, like early peer-to-peer systems. Like the communities around those technologies were similar to communities that form around open source projects, where people are just like spending a bunch of their free time. There aren't any clear financial incentives, and they're mostly just curious.
So, I mean, this brings up a really good point. Do you feel that some of the reasons that you've been able to have a more slow and less volatile, emotionally volatile, not price volatile growth specifically for your asset is having some of those financial properties but de-emphasizing them as much as humanly possible?
Absolutely. I 100% agree, because even our early developer community, because we didn't have a legal framework to distribute the token to them, they still don't have any tokens, right? So the SEC qualification is the legal framework through which there can be some distribution of tokens to them. everyone who was building on top of Blockstack was doing it for the love of technology. They were doing it because they believed in the mission of what we are trying to do, and they want to help have more secure, more private, more decentralized versions of applications out in the market. And I think in some ways, not having that public ticker or a token with financial incentives in some ways actually help seed the Blockstack community.
So what I'm hearing from you is when we think about the difference between altcoins, meaning anything that's not Bitcoin, and Bitcoin, you can think of Bitcoin in financial terms because that's its purpose, but you should think of other kinds of crypto assets in terms of their functionality more so than maybe their price volatility, because that will be a long-term determiner of that value.
Yeah, I think, well, I'm going to try and say that in a different way. So one way to think of these crypto assets is that they are a very powerful concept, but with any powerful concept or tool, you could end up hurting yourself as well, right? So you need to take proper care in how you're using it for incentives, right? So that's game theory, and it's a well-established field, and like for example, I don't know that much about game theory. So when we were designing the game theory, we went to the experts and got their help to help us with that work.
That's something else you've said before. It's going to established experts. These industries and these philosophies are not new concepts, and so when you're building a new thing, you need to build on that expertise that already exists.
Yes, and same with token economics, right? Like again, I'm not an economist, so we went to people who have deep expertise in these areas and got their help on our token economics. Again, like I think this is one of the reasons this is such a fascinating space, and why it's like a rabbit hole, right? Like people who get pulled in, like yourself, right? Like it's every day you're getting more and more involved. Think about it. Like I come from distributed systems, so my field is involved. There's applied cryptography. There's game theory. There's basically aspects of like design, like monetary supply and incentives and economics around it, right? And the list kind of like goes on, and all these different things are at play at the same time, like capital markets. Like this is the thing that people at Wall Street do, and you throw that into the mix as well. And it's a very fascinating world, but in many ways, to properly understand it, you need to like peel the onion, separate it out, and look at each thing in as much of an isolation as you can.
Gotcha. So that's the concept of don't roll your own crypto. Like don't think that you're inventing something.
Yes. So that I think that's a great thing. That line, don't roll your own crypto. I wish there was a similar line for distributed systems.
Oh yeah?
Like scalable distributed systems. Like the concept.
What does scalable even mean?
So think of it as Google, that people think just magically always works, no matter how many users are using it, or no matter how much data you throw at them, it just magically always works. There is a dedicated team of distributed systems engineers who've been working for decades now at different stages of scalability of Google to make that happen, right? So one of my colleagues from Princeton he started in the same year as I did. He's working on the Google Spanner core systems. Google Spanner is the system that stores data for everybody at Google, right? So the technical challenges involved with scaling something like Google Spanner is something that a handful of people can understand, right? Just like in applied cryptography, a handful of people can understand like how secure a certain, let's say, mechanism is, and not everyone should try to build their own, right? Like so. I think that's the thing where I wish it was as clear in distributed systems that don't try to roll out your own scalable distributed systems as clear it is in applied cryptography.
So you've been giving me a lot of answers, and I'd like to wrap things up with something that you're grappling with. What is a question that you look at the marketplace today that you think is an important question we're going to see play out over the next few months that you honestly don't know the answer to?
I think the biggest thing that we're going to start focusing on a lot is going to be broad user adoption and more importantly, user retention. Right, like it's one thing that people are interested in a new application, they want to just check it out or try it out. The stage I want to reach is, I think the mental model I have is almost like just looking at my own laptop and seeing what applications I use on a daily basis, and is that this application decentralized and secure, and preferably built on Blockstack. So for us, the kind of like end game is that every single utility that you want from your system, like even email, right? So there's Dmail, there's Graphite, the Google Docs, there are messengers available, right? So it's entirely possible. We're seeing kind of like a preview of that world, but I want to see it materialize in reality, which means that you will need to have user retention, so that users are actually using these applications on a daily basis. And I think that is something that the entire industry needs to figure out. But obviously, we would be spending a lot of resources on that.
Awesome. Thank you so much for coming in and joining us today. For anyone who's now just joining CoinDesk Live, I'm Lee Quinn. This was Muneeb Ali of Blockstack. And next we'll have Yoni Assi of eToro, which is a crypto exchange. So stay tuned.